Hey, welcome back. In today's video, we're going to talk about Amazon and why I think it could be a $4.5 trillion company by 2028. Amazon is one of the largest companies in the world, boasting a $1.4 trillion market cap and achieving revenue of over $514 billion in 2022 alone, with common knowledge suggesting that due to the law of large numbers, Amazon may face challenges consistently outperforming the market over the coming decade. I believe this is just the beginning for the company. Amazon's strategy of continuing to defer profits for decades to maximize shareholder value over the long term is why I believe their AWS, retail business, and their advertising business will drive growth and get Amazon to a $4.5 trillion market cap, which is nearly a 3x from here. And in this video, I'm going to outline each part of their business and deep dive into what we can expect from their operating income within the next 5 years, their growth rates, and their operating margins. So we can see if we can get some kind of valuation on this company or expected operating cash flow to get a better understanding of where they might be in 5 years. So with that being said, let's get right into it. First, with Amazon's business model and culture. What makes Amazon unique compared to its large cap peers is its aggressive and continued reinvestment back into their own business. Between 2020 and 2022, Amazon's capital expenditures have exceeded $160 billion to build out the infrastructure for their retail business, as well as update certain of their AWS data centers by buying new hardware and expanding their capabilities. And if we take a look at their competitors and compare their investment into the same space, we see that companies like Walmart spend only 20% of what Amazon does in CapEx per year, and Target with an even more dismal 5%. This rate of investment by Amazon is extremely costly in the short term, but as they expand their infrastructure into foreign markets and maintain their dominance within the US and North America, it further solidifies their competitive advantage and continues to grow their revenue above the $500 billion mark with no signs of stopping. This level of reinvestment has been a little bit more aggressive than most have wanted, but for those of us who have a long enough time horizon, this investment is deep value in my opinion. Now, the reason I believe that this business is deep value is that, as a whole, the e-commerce business is unprofitable due to the reinvestment, and AWS and their advertising business support the growth and expansion of their retail business all over the world. However, the reason I think that it'll outperform is because whenever they decide to turn on the spigot for their retail business, we could see significant growth in operating income and free cash flow. Now that we understand the dynamics of Amazon's business and what they're really doing with the majority of their profits, let's look at AWS. Everyone knows the story of how Amazon Web Services came to be the largest cloud service provider, but that doesn't mean that we should take for granted the stellar business that this is, with over $23.06 billion in revenue in just Q3 of 2023 alone, while still growing at a 12% rate. What's even more impressive is that they grew their operating profit by over 29% in the same period. Now, AWS is in a great position to take advantage of the growing cloud market over the next decade. Not to mention that although growth has slowed down in the recent terms, there's no reason to believe that it won't re-accelerate at some point. And I say this because we have seen their cloud service business slow down from 49% all the way down to 28%, and then bounce back up to 40%. And this type of cycle has happened multiple times throughout its history, leading me to believe that it wouldn't be too crazy if it went from 12% back up to somewhere in the high teens or 20%, rather than just slowly moving downwards into the single digits over the next 5 years. Now, AWS is the powerhouse of their business and is a key part of how they grow the other portions of their business that are loss leaders in the short term. And my belief is that AWS plays a key part of getting them to that $4.5 trillion market cap. Now let's move on from Amazon Web Services to their e-commerce platform, with Amazon spending over $60 billion a year to expand not only AWS capabilities, but what they have said in their earnings calls is to expand their infrastructure, cars, planes, warehouses, and much more to provide a better prime service for their delivery network and their just overall logistics. I believe that there comes a point where they will no longer have to expend this level of $60 billion in 1 year just to expand this network. And if we believe that Amazon will reach a maturity point where they no longer have to expend this massive amount of capital expenditures on physical capital, then I think the question arises, how much of that money just flows directly to the bottom line then? And how soon is that from actually happening? Well, of course, not all $60 billion in CapEx would just instantly flow down to the bottom line, as their increased infrastructure would need maintenance, among many other things, to maintain its operation. But it's not crazy to imagine that we could see tens of billions of dollars being freed up for them to reinvest within themselves in different areas or to return back to the shareholder. Another way to think about this is, as Amazon saturates its markets that it operates in with ample amount of infrastructure to support the growth into those areas, there will be explosive growth in operating income. If you combine this effect of lowering costs with the potential of Amazon raising prices by just a few percentage points, you could see tens of billions of dollars flowing directly to shareholders, playing a crucial role in them reaching a $4.5 trillion market cap. If we take a look at this chart, we have Amazon's free cash flow every quarter since 2014. As we can see, over the past 3 years, there has been a large amount of negative free cash flow. Even the money generated from AWS was reinvested at an aggressive rate to stimulate future growth. This also highlights the magnitude of their reinvestment in the more recent years, as they took a huge hit in the short term to cement their position in the market and expand to meet demand during 2020. Now, before we get to their ad business, I want to talk about what happens if they flip the switch on their retail business to optimize for profits. And I think the thing that investors considering Amazon need to start thinking about is what happens when Amazon decides that they want to maximize their profits on their retail business worldwide. And I understand that many would argue against this, saying that it goes against their culture and their management team's style of just consistent reinvestment back into their own business. But if you look at AWS, they're generating massive returns within that business while still investing heavily in its growth. So I think it's only a matter of time before they run out of ways to spend this money of increasing their infrastructure, warehouses, cars, planes, and all of that, and eventually are just generating so much money off of the investments they've made in the past decade that they can't reinvest all of that money even if they wanted to. Now again, if we make that assumption, then the question is, how high will the profits go? And for a second, let's take a step into the land of hypotheticals and compare their business to, let's say, Walmart, to try and predict profitability in the future. Now Walmart has historically had an operating margin of around 3.5%, reaching as high as 6% for long periods of time, as well as low as 3.3% in 2023. And so let's assume that Amazon has reached that maturity point and now wants to generate some more profits off of this business and decides to just do 1.25%, which is less than half of what Walmart is capable of. And I know Amazon and Walmart are extremely different businesses, being that Walmart has physical locations with store workers that operate in a very different way that Amazon does, being that they are completely online. But if we take that 1.25% margin on their over $337 billion in revenue coming from third-party sellers and online store revenue, we get an additional $4.2 billion off of some extremely conservative assumptions on a business that is still growing to this day. Now, this is an extremely low-ball estimate, given that Amazon is a far more efficient business than Walmart when it comes to online sales, and the fact that they sell primarily online and not in physical stores. Another factor that we must consider is that they are still growing rapidly across the entire world and are projected to reach over $1 trillion of revenue by 2030. And when you compound the three factors that will impact Amazon's profitability in the future, being their continued reinvestment into themselves, their aggressively low prices to gain market share, and their continuous growth within the markets they already operate in, we could see explosive growth in their profits. And this is a perfect storm for a company that wants to grow as much as possible until they are the only viable e-commerce platform in all of the markets that they operate in. And then after they get to that point, they will be able to monetize this by raising prices slightly or cutting costs, while they also reduce the cost of expanding their network. Now, moving on from their retail segment and focusing on their advertising business, their ad business has been growing at a staggering rate, generating really high margin revenue for their entire business. Not to mention that this business is growing at over 26% year over year, and is already at a staggering $12.06 billion in the third quarter alone. Now, $12 billion is not much compared to their $537 billion total, but their ad business has over a 50% operating margin, and this means that it brought in just as much profit as their AWS business, despite having such a smaller total revenue number. Now, there are many great businesses, as we've discussed, under the Amazon umbrella. But the question is, can it reach a $4.5 trillion market cap? And although Amazon is an incredibly hard business to value because of their many different segments, many different operating margins, and the fact that they reinvest so heavily, clouds what their profitability could really look like. Now, that being said, let's do some back-of-the-napkin math and see if we can estimate some future financials for Amazon and their different businesses that are within it. Now, if we take a look at this, I've projected out the revenue growth, operating margin, and operating income of these three segments of their business. And let me explain each number and how I got to it. Now, for AWS, I got an 11% growth because right now they're around 12%. And although I could see a reacceleration back into the high teens or even somewhere in the 20% range, I chose to stick with a more conservative 11%, assuming that it continues downward slightly over the next 5 years. And for their operating margin, I've seen that they have anywhere from 29% to 31% on their AWS business. So I went with the lower end. And if we take those two numbers and extrapolate them over the next 5 years, we would have $39 billion in operating income from AWS alone. Now their retail business, I really lowballed with a 2% revenue growth and a 1% operating margin. And as we've discussed earlier, 1% is still extremely conservative because I'm comparing it to Walmart and Target and then even cutting that in half. And if we take those numbers over the next 5 years, we have around $3.7 billion in operating income. And now if we look at their ad business, I chose 20% for their next 5-year CAGR on their revenue growth. Even though it is growing at 26% currently, I made the assumption that it slows down drastically over the next 5 years. And if we put an operating margin of 23% on that, which is similar to Google and Meta's operating margin, despite them having many other businesses besides their core search and advertising platforms, we still get $21.6 billion in operating income in 2028. And with all of those conservative assumptions, that brings the total to $64.3 billion of operating income in full year 2028. And when you compare that $64.3 billion to the operating income in 2022 or 2021 being $12 billion and $24 billion respectively, you get more than a 2.5 times increase in operating income in just 5 years. Now, my main thesis behind my investment in Amazon is that their reinvestment into themselves only continues because they see great returns on their money. And that the moment that stops, they will optimize for profitability and return value back to shareholders. So that means that as an investor, when they stop seeing good returns internally on their capital, then their profitability will skyrocket as their capex decreases and other expenses will flow directly to the bottom line. And if Amazon can increase its operating income by 2.5x in just 5 years, I have no doubt that they will be able to be 3 times the size of today by 2030, considering they have large tailwinds in nearly all of their businesses. If you've made it this far into the video, I think it's really important to note that I didn't even include their Amazon Prime membership and the $35 to $40 billion a year that brings in, as well as their retail business of in-person stores like Whole Foods and their Amazon Go stores, which would obviously add to their profitability and make these assumptions even more conservative than they already were. Now, I remain heavily overweight in this company in my portfolio, and I'm highly concentrated into this position for the many reasons that I've stated in this video. Now, this is not individual investment advice because I don't know your circumstances, your time horizon, or even your risk tolerance. So please go do your own due diligence and figure out what investments you think are a good idea, and don't listen to some stupid idiot on YouTube who's just sharing his research for anyone to hear. Now that's all I had for you in this one. If you like this video, I'm going to do a more in-depth deep dive into each aspect of their business, and those should be coming out over the next month or two. Now if you're still watching, if you could hit that subscribe, I'd really appreciate it. I'll see you in the next one.